This does not kill crypto. This is one event that helps stabilize crypto. There's going to be a silver lining to this disaster. There's no question about it. It'll be called regulation. It will be litigated in the years ahead. By the time this is over, because of the nature of the chain itself, we'll know where that money went. We may not know the owner of the wallet, but we're going to find out where every single token went by the time this is over. I think what we need now is to flush out the auxiliary collapses that are going to occur because of accounts that, let's say, public mining companies had with FTX or other hedge funds that have obviously over the weekend gone to zero in their accounts. Now, first, I have some disclosures here. Okay, number one, I'm a paid spokesperson of FTX, so I've been dealing with their management. I've spoken to Sam last week on Thursday. I also have corporate accounts in FTX. I'm also a shareholder of FTX International and FTX US. So now we got that out of the way, I just want to make sure I'm being very transparent on this. But we're not finished with the collateral damage. And so to your question, this is a bottoming process. An event like this is very important because it's finally going to have several impacts in areas that we need. It's going to accelerate regulation, number one. As we speak, I'm at the governor's conference in Orlando. This is topic number one in financial services. The amount of discussion going on last night and certainly today about this situation is going to move. It's definitely going to move legislation in the House. There's no question about that. This is a defining moment. But what we don't know is how many other dominoes are going to fall yet. We need that to finish out. Explain the context of that conversation. On Wednesday of last week, the whole world knew that there was a liquidity issue at FTX and that the hold on the balance sheet was somewhere between $6 and $8 billion. Now, I work in the indexing market for sovereign wealth and pension, and so we were getting a lot of inbound requests about information about the situation because that's the kind of money that an institution or a sovereign wealth fund can put to work if they thought there was an interesting opportunity. And in financial services, illiquidity events or liquidity events like this can be interesting investment opportunities if you think it's a legitimate investment and it's not going to issues with the regulator. So the timeline of that conversation is I put a message into FTX. I wanted to confirm the amount being requested. Was it going to be 6 or 8? Sam called me back. Very, standard conversation. He was, rational, and we had that conversation about confirming what the amount was going to be. The amount was $8 billion. That's what they were looking for. So I went back to these various entities that were asking me about it. And by that time, the SEC chair was on the air around the world. I think the network was CNBC. And he made it clear that they were going to come down hard on this situation. So liquidity. And here's the interesting debate that was going on. Let me share this with you. So let's say your sovereign wealth fund, $8 billion is a rounding error for you. Do you really need $8 billion? And let's say what was on the table in the deal was ownership of FTX, which basically was on the table. So for whatever the amount is to keep FTX liquid and compliant, you could own it. Now, if you think about Binance and FTX, that's about 82% of the world's exchange. I mean, that's it. And that's a big, big chunk. So there was interest. And here's the real debate that went on. It really wasn't $8 billion required, because if you could put in, let's say, $2 or $3 billion, then open the gates and let anybody that wanted to get out, get out. The minute you open a gate, some large percentage doesn't use the gate because they feel they're safe and now can transact again, and they've got backing. That was the debate going on in the later hours of Thursday of last week. My guesstimate, and it's only a guesstimate, is the number that could have cleared FTX and kept it solvent would be about $3.5, $4 billion, which is not a heavy price to pay for what had been built up over those years. However, once you go into a situation where regulators are coming in and the whole thing goes south, there's nothing you can do about that. But for about 12 hours, that was an interesting conversation going on all around the world. go through a bankruptcy process. There is precedent for this. You can go back and look at Mount Ott. It took 4.5 years, and because that was also multinational. So we've got the shares, my shares in FTX International, my shares in FTX US. Well, we're going to have to write those down to zero, most likely. And that happens, you know. This is not my first. It's not my first bad investment. It won't be my last, but luckily I make more good ones than bad ones. But the bigger question about this from the institutional perspective, and we're having this dialogue even today, is this does not kill crypto. This is one event that helps stabilize crypto. There's going to be a silver lining to this disaster. There's no question about it. It'll be called regulation. And I'll tell you why. It's not new regulation required here. You can look at any broker-dealer exchange tied in the U.S. to stocks or bonds or futures or commodities and have regulations that are protecting investors in the U.S. market. So it's not a big stretch to have the regulators finally say we're going to apply that to crypto exchanges the same way. And I think that's going to happen. You're absolutely right to ask these questions, and I guarantee you it will be litigated in the years ahead. By the time this is over, because of the nature of the chain itself, we'll know where that money went. We may not know the owner of the wallet, but we're going to find out where every single token went by the time this is over. And that's probably a good thing at the end of the day. But the questions you're asking are the right questions. And so going forward is you have to ask yourself, what institution is going to put significant capital, because I've had this conversation early this morning, into any unregulated exchange? You don't even have to name names. They're just not going to do it anymore. And in fact, what we're doing in our operating company is we're taking, because fortunately we have other positions that we're not in at FTX. Here's what we're doing. I'm just one investor, but I'll tell you. We're taking our positions and we're moving them to Canada. We're putting them into WonderFi and BitBuy. Why? Because it is the world's first, excuse me, it is the world's first regulated license issued to a broker-dealer exchange, all tied in one, under the order from the OSC. There is no optionality for commingling accounts. That doesn't happen in Canada. And in a really strange way, what I'm saying here is it's incredible that I have to go to another country outside of the US to finally find a place where I can put significant institutional assets that's regulated. Our regulation has fallen so far behind that I no longer feel comfortable putting significant amounts into anything that is not regulated under the OSC order. It's one of frustration. There's no question about it. I'm still a huge advocate for the potential of blockchain and cryptocurrencies. I'm disappointed, like many other shareholders. It sets, in a way though, I always try and find what is the outcome of something like this. I mean, yes, I'm a shareholder in the international. That's a zero. It's not the first time I've made a bad investment. Probably not the last time, but luckily I make more good ones than bad ones, and I learn from my mistakes. What's going to happen now is there won't be another situation like this for institutional investors ever again. We're simply not going to put capital to work until this stuff gets regulated. And what is occurring, and I'm just one voice in it, what I'm going to be doing is I'm going to fly to Washington, and I want regulation. I want it now. No more delaying. I think this puts tremendous pressure on the SEC. I think a bill like the Stablecoin Transparency Act, which has been floating around forever, not going to signature, not going to markup, we got to stop doing this to ourselves. As an industry, it has to stop, but also it's time to move forward with regulation. And if this is the bottom of the crypto market. A massive player goes to zero. And now you build from the ashes. That's the upside. I am still going to invest in crypto. I lost money in the accounts there. They have a gate on them now. It doesn't stop me from buying more, and I'm going to do just that. I'm going to take advantage of the fact that most of these currencies and tokens and coins have absolutely been beaten into the ground as a result of this, and probably a buying opportunity. That's the way I look at it. I'd like to start with one thing. I don't think we can solve for every single asset in crypto. I want to do one thing, and that one thing is to pass the Stablecoin Transparency Act. One thing. because that allows us to use the US dollar as a payment system. I would use that in all of my businesses every day. It's far superior to ACH, far superior to SWIFT, far faster, more transparent, 100% audible. All I need is the regulation that forces an audit every 30 days and guarantees me the backup for this is Treasury bills less than 12 months of duration. That's one thing. Very simple. That would signal to everybody around the world that the regulators here in the United States are taking crypto on, starting to put rules in place, putting the guardrails on. No one is going to play ball anymore in this space on an institutional level with serious capital till we get it done.